Scott, we're back for our second big story. The NASDAQ has taken its biggest tumble since 2022, thanks to earnings reports from Alphabet and Tesla. Alphabet's quarterly earnings showed a slowing growth in advertising sales, with ad sales rising 11%, down from 13% in the previous quarter. On top of that, Wiz, the cybersecurity startup we had talked about, Alphabet planned to acquire, had decided to turn down the $23 billion offer. Alphabet shares are down almost 5% in the last 5 days at the time of the taping. I want to talk about this, but I'm going to mention Tesla earnings have showed a 7% decline, with auto revenue, with earnings per share coming down below Wall Street estimates. Tesla shares are down 10% in the last 5 days, giving up a lot of the gains they've been making. NASDAQ is down over 3% in the last 5 days, and the S&P is down 2% because of these tech companies. I'd love to hear your thoughts on this. This is your big area of expertise. Talk a little bit about Alphabet first and then Tesla.
Well, Alphabet actually had a decent quarter. It's just that Alphabet's dealing with this existential issue of having 1 foot in and 1 foot out of AI, in the sense that they have Gemini, but Gemini gets about an eighth of the traffic of OpenAI or of ChatGPT. Mm-hmm. And when you think about all the head start in the captive audience across Google and Android, to have only the eighth of the traffic of what is supposed to be a startup, but is really just Microsoft AI, is unusual. And the question is, they're trying to incorporate AI into their core platform search. And there's still a little bit, people would argue, trapped in the innovator's dilemma. And that is, they don't want to go all in on Gemini at the risk of cannibalizing this $250 billion toll booth, amazing, best business probably in history called search. So they're still kind of, I would argue, a little bit 1 foot in, 1 foot out, trying to have their cake and eat it too. I understand why they're doing. People got spooked about YouTube sales slowing. I didn't think it was that big a deal. And the other thing that's hurting their earnings is, like everyone else, they're now, except for Apple, they're now in this arms race, and their CapEx was dramatically up, which sort of hit earnings. The bigger story, I think, or what was more like genuinely bad news, was Tesla. And that is the EV market. I think it's interesting. An interesting analogy would be the streaming market. And that is, it was overinvested because people saw it as the future. And now there's a bit of a shakeout. And that is, and the way you see the shakeout is in an intense price competition. A year ago, the equivalent EV was $8,500 more expensive than its internal combustion peer. Now that number, that margin, that premium has dropped to $1,500. And the F-150 Lightning, the EV is actually $10,000 less than its internal combustion counterpart, probably because they produce too many. In addition, that while the market continues to grow, Tesla has not. A lot of people would describe its products as a bit tired. They have made a lot of progress around.
Describe them. They are a bit tired. We've been saying that for a year. Like, where's their new stuff except for that heinous Cybertruck?
I drove in a friend of mine is this master of the universe hedge fund guy. And I went out to the Hamptons to see him, and he has a matte black Cybertruck, and people were stopped and staring at it. And it's just, I drove in it. I would describe it as a ridiculous car out of a Simpsons episode. I think it's insane. But
were you embarrassed to get in it? I'd be embarrassed to get in it.
Oh no, there's a lot of shit I've done that's much more embarrassing.
But what's the problem? What does he have to do here? He obviously he took a vote on Twitter whether to invest $5 billion in XAI. I mean, I'm literally like, when is the SEC going to come and arrest this fella?
Well, first, I mean, there's a couple things. One, if you listen to the earnings call, the questions were more pointed and more heated than they've been in a long time. To this point, the earnings calls have been a bunch of stenographers and sycophants thanking him for a great quarter. This one was distinctly like, boss, we have been waiting for a robo-taxi for 5 years. You know how frustrating that is to be on a corner when you call and they say, oh, a robo-taxi is it's a minute away. It's a year away. He's even saying now that it could be by the end of the year, but it might be 2025. He said, I think in 2019 or 2020, we were a year away. And people's patience.
He constantly.
People's patience is really wearing thin. But more than anything, I'm a valuation guy. If you look at forward earnings, Ford trades at 7 times forward earnings. GM trades at 5 times forward earnings. Right. Ferrari, an amazing company with, you want to talk about a moat,
beautiful
trades
car.
at 50 times, right? Tesla trades at 99 times forward earnings. Yeah. And the moment you say that, people say, well, it's not a car company. It's an energy company. It's going to be a robo-taxi company.
Better be something else.
The scariest thing in that earnings call is that their 2030 projected profits, they're saying 80% of those projected profits will come from its robo-taxi division.
Right.
So they are estimating that 4/5 of their profit are going to come from a division in a technology that they haven't shown an ability to even deliver yet.
I know.
I just real quick need to correct myself. It wasn't the company, it was Kathy Woods, which makes it batshit crazy anyways, but she was saying 90% of Tesla's enterprise value earnings will be attributed to the robo-taxi business by 2021.
You know what I was thinking when I heard these? I was like, this guy had everything. Like he had it. Like he could have shifted into new products, new exciting things. He could have owned it, like really been Ferrari, right? And he's just blown it here in a way that it's sort of sad because it was a very good company, and it still is in a lot of ways. It's just I'm just
The corporate governance here, I mean, it's just the idea that you would say to Tesla shareholders, I'm going to take $5 billion of our hard-earned cash flow and use it to try and take my other failing company and put on an AI dress. That wouldn't even be a conversation at a board level at most companies. They'd be like, no, stay focused on, we do cars, boss. We're not in media, and we're not interested in funding your adventures in AI media with our hard-earned money. And instead, he takes to a Twitter poll. Have you polled your board members that represent the shareholders at Tesla? But again, corporate governance is sort of a cute novelty we used to talk about before Musk.
It is such a waste. I was just thinking, I'm not inclined to him in any way, but I feel bad because it was a really good, you know what I mean? Like, you're like, why did you go out with that girl when you had this girl? Anyway, people make bad choices.